Hello everybody. So this video is entitled 8 AI stocks, and I'm going to go through the big AI names as well as 2 of the neo cloud, being Nebius and CoreWeave, as well as Taiwan Semi. Kind of talk about these. The goal of these videos is really not a deep dive on any of these companies. The goal of these videos is to eliminate and to pick kind of a cheap stock, to find a cheap stock. So this is a video where I go through my spreadsheet and I simply compare the valuation. I don't talk too much about the product in these videos. I look at the chart, I look at the stock price, and I look at the valuation, and I judge stocks mostly based on 2 metrics. This is how I've done it for years now on this channel. The metrics are enterprise value over gross profit over revenue growth. That's the cost of forward growth. How much am I paying for 1% of forward growth for each of these companies? And of course, I want it to be as low as possible. I tend to consider under 0.3 a very good buy. Under 0.5, it's a cheaper than average stock. It's a better buy, but not a very good buy. And of course, above 0.5, I tend to think the stock is expensive. That's the first metric I look at. The second metric I look at is rule of 40. And as you can tell, so many of these stocks have a rule of beyond 100. So many of them. Rule of 40 is what VCs consider good investments. Rule of 40 is the growth rate plus the cash flow margin. I use EBITDA margin as a proxy for cash flow in my spreadsheet. When you add the 2, you get your rule of 40. VCs tend to like a 40 plus. With AI, we're getting a bunch of 100 plus. And of course, my spreadsheet and the EV over GP over RG metric, which is the metric that I prefer, is very sensitive to the forward growth rate. And one of the good things about all of these companies is that they have, for lack of a better word, they have epic forward growth rates. They grow very, very fast. So let's go ahead and let's talk about these stocks. So the first 2 I want to talk about briefly and either eliminate or retain is AMD. So let's start with AMD. AMD is the most expensive stock in my spreadsheet. I want to cover AMD. This is not the first time I've discussed AMD on this channel. I just always end up finding AMD expensive at a 0.96. So 0.96 is almost a 1. It's too expensive in my spreadsheet. And also, I can't possibly justify AMD being more than twice as expensive as Nvidia. So AMD, in the process of this spreadsheet, I eliminate. AMD is eliminated. Now, a stock that I've covered on the channel before, a stock that I like, a stock because I like inexpensive stocks, it's Super Micro. Super Micro computers, of course. This was the hot stock of, was it 2024? Yeah, in 24, this stock was really hot. And then short sellers went after it, and there were a lot of arguments about the accounting. A lot of people were talking about, Taiwan connections, Taiwan ties, lots of drama. I'm going to call it accounting drama. The company came out 3 times saying the books are good. The auditor came out, said the books were good, but the damage is still done. And typically this negative aura tends to last on a stock. And it's been an overhang on this stock for a long while now. But what I like about this stock is that it's growing next 12 months. 51% is the growth rate. They make money. They have a rule of 58. The price of that growth is 0.23. So it's a very cheap stock. But more importantly, what I like is that, well, the way my spreadsheet calculates it, it's down 29%. In the past year, it's down 37%. So it's a third off. The stock is essentially roughly a third off for servers. What does Super Micro do? Right? They do racks. They do server racks. They have a key role in the AI build out. Super Micro and Dell. Dell is the main competitor to Super Micro, and oftentimes they do projects together. The big problem with Dell is that Dell is not a pure play. You gotta buy all of the other slow growth at Dell. Super Micro is a pure play on the racks, right? On building out the rack. And I like Super Micro for that reason. So I think Super Micro is one of the cheap stocks, and I like that it hasn't run a lot. And that's the problem with a lot of these stocks. You'll see that's the problem with a lot of these stocks. A lot of them have run a lot. Now let's talk about the elephant in the room, Micron. everybody's getting so excited about Micron. And of course, why, right? Because the stock price more than tripled in next to no time. But the stock price more than tripled in next to no time. Now, when I look at the valuation of Micron, I get a 0.17 and a rule of 187. But that's because the market is projecting revenue growth of 111% next 12 months. What Micron is saying is that the memory card, you may have seen the CEO say that, the memory card they were charging $5 to Apple, they now charge like $40 or $50. So they've 10x their prices. They have a lot of pricing power, and it's leading to that insane revenue growth number, which I find very comparable to more optimistic takes on Nvidia's revenue growth number. And it's trading therefore at a 0.17. But that 0.17 is very low, partially because that growth number is so high, point number one, but also this stock has insane profitability. Profitability is 76% EBITDA margin, EBITDA cash flow. So they're going to be printing a bunch of cash. But what I don't like about Micron is that it just 3.5x'd in no time. And if you look at 1 year, it 8x'd. It more than 8x'd in no time. So to me, this is a stock that has ran too high, too fast. It's very hyperbolic. If you look at a long-term chart of Micron, I hate it because I see something very, very hyperbolic. But I have to realize that Micron is actually cheap in my spreadsheet. My spreadsheet is telling me that Micron is cheap. Micron is, in fact, the cheapest out of all of the stocks that I'm covering today. Therefore, what's my takeaway on this? My takeaway on this is that I would be interested in Micron if we get some sort of a fear. Can we get a memory-specific fear? Can we get some fear on memory? Like, somebody launches a new AI model that uses 10 times less memory, for example. That type of fear could take a stock like Micron down 30%. And then I would be really interested in doing a full analysis and a full deep dive. But I don't want to do a full analysis and a full deep dive on a stock that has already 8 or 9x'd in 12 months. It seems like chasing, and I don't chase. Let's talk about Broadcom. Broadcom, I find the chart looks very good. Broadcom is really an elite company. They build a lot of these ASICs for whether it's for Amazon, whether it's for Google. They design a lot of these custom chips, and Broadcom is kind of the forgotten player in the chip world, right? You have AMD, you have Nvidia. People tend to forget about Broadcom. I would argue it's also has a very good management. They're a very good integrator. They've done a lot of successful acquisitions. It's a very solid company. What I don't like about Broadcom is the price on EV over GP over RG. It's actually a little expensive at a 0.62. The rule of 40 at 106 is, of course, stellar. But at the 0.62, I find Broadcom a little expensive. But the chart looks good. I would sleep much better at night getting into a Micron than I would do, getting into a Broadcom than I would do getting into a Micron, because Micron has barely moved in a year, right? Plus 30%. So it hasn't moved that much in a year, and it's down 23% from the recent all-time high, and therefore I would be much more comfortable looking at a stock like Micron, like Broadcom, rather than Micron. I keep talking about Micron. That must tell you my subconscious is telling me to buy Micron. That's probably what my subconscious is saying here. Anyways, moving on. Let's talk about the two I guess I want to say OGs, the two original big names and big plays, and it's of course Taiwan Semiconductor and Nvidia. So let's talk about Taiwan Semi first. Taiwan Semi is cheap at a 0.29. It's cheap. Rule of 40 is 103. It's cheap. The revenue growth is 33%. It's actually, and I feel bad saying this, but it's actually the slowest growing AI name. At 33% next 12-month revenue growth. Right? This company is going to grow by a third, its revenue by a third, so it's growing super fast. And it's the least high growth out of this group, which is kind of crazy to think about, because in any other group growing 33% would look outstanding. Growing 33%, of course, in AI doesn't look that outstanding, because you have Micron who's about to double its revenue. CoreWeave the same. Nvidia, I'll get to Nvidia in a second, but Nvidia could easily double its revenue, maybe in 15 months, maybe not in 12 months, but in 15 months maybe. So Taiwan Semi I would argue the only thing that I don't like is it's up 90%, but it's been a very steady, heady stock. And Taiwan Semi, I think a lot of people like it because it wins no matter what. Like you don't have to pick the best chip. You don't have to figure out who's going to be better at inference between AMD, Nvidia, or the custom chips made by Broadcom for hyperscalers. You don't have to figure it out. Taiwan Semi is kind of like buying the whole pie. So at a 0.29, and it's a cheap stock. Rule of 40 is 103. I mean, these are amazing number. The only thing I don't like is I think it ran a little too much. You know, I would like to get a deal. I like to get a deal. There's no deal. There's no deal on Taiwan Semi. Now, for Nvidia though, and you know what I'm going to say, I've said this multiple times on the channel, to me, the most compelling AI stock remains Nvidia. How in the world, if you go back to August, go back to the month of August of last year, Nvidia is only up, 3% from August? 3 to 4% from August. We're only up 3 to 4% from August. So if Nvidia doesn't bounce in July, you're going to be looking at a stock who will have been roughly flat as the sales double. A stock flat, sales double. That's the setup that I like. I do, year to date, Nvidia is not doing good, but if you look at 1 year, we're at 21% growth in the stock price. That's roughly the NASDAQ. That's not very good for the company that started it all, the pioneer, the company that owns the software layer, CUDA, the absolute leader in the field. It's only growing 20%. To me, every day that Nvidia stays under 200 is a day where Nvidia, it's becoming more of a coiled spring. We're adding more pressure to the coiled spring. If we stay below 200, we keep staying below 200. At some point, the stock will pop again. At some point, it will pop again. It's very tough to understand. And I think Nvidia maybe is a victim of capital rotation. A lot of people are like saying, okay, now I'm going to sell Nvidia and I'm going to chase Micron, and maybe some people are fearful and they see 4.6 trillion and they are scared. But, it's important to realize that, as Jensen said, they have visibility into 500 billion worth of revenue over the next, was it 5 quarters that he said? And he said that a while back. So that's why when I put 62%, that's the analyst number here on revenue growth. The revenue growth could actually be about 100%. And if you put 100% revenue growth, Nvidia would be, I guess, the second cheapest in the spreadsheet behind Micron, something like that. For the absolute leader in AI, Nvidia is the absolute leader in AI. So I don't understand why Nvidia hasn't run. It seems like a lot of the hype is moving on to new stocks, and as a consequence of that, any extra day that Nvidia stays below 200, Nvidia becomes cheaper and cheaper and cheaper. And to me, this stock is overdue for a bounce. At least that's my take on this one. And let's conclude. And again, these are slightly different from AI. They are neoclouds, right? They are. So Nebius and CoreWeave, I could have put IREN in there, but I haven't put IREN in the spreadsheet yet. I'm also missing ASML, right? So I need to add ASML. I need to add IREN in there, but for the time being, let's look at Nebius and CoreWeave. So as you know on this channel, I was very big on Nebius under 100. You remember 2024? I made a lot of videos on Nebius when it came public. Was it in late 2024? Was it in November 2024 or something like that? I like Nebius throughout 2025. Do I still like Nebius at 0.21? Yes, it's cheap. I find it cheap, but we need to realize that that number is so low. Why is that number so low? Because the company is projected to grow earnings, revenue, by some absurd amounts of ARR are about to hit Nebius, and it's tough to know exactly which number it's going to be because it depends on their execution. It depends on how fast they are actually building these AI factories, as they call them, right? But when I look at the chart, again, it makes me uncomfortable to see a stock that was just $100 in January be at some point close to $300 at some point earlier in the month of June, right? We're at $280 or something like that. So it makes me a little uncomfortable. It's running too fast. It's running a little too fast. Maybe getting a little ahead of itself. Maybe overdue for a small correction, and so we'll see if that happens or not. But the good news is there's CoreWeave out there, and CoreWeave used to be the former darling, and CoreWeave has been left out by the market. It's been entirely forgotten. So when I look at CoreWeave on my metric on EV over GP over RG, I get a 0.22. So CoreWeave, and it's 40% off compared to where it was a year ago. So when I look at just the chart and they do similar things, I find CoreWeave to be quite interesting. Now, why is CoreWeave seemingly cheap and seemingly down? Because the market is spooked by the debt that CoreWeave has. But make no mistake, whether you look at IREN or whether you look at Nebius, their debt is going to grow as well. There's going to be a lot of debt as well on these build-outs. So I'm not as spooked by the debt as the market would make it out to be. I think CoreWeave would be worthy of a deeper analysis at these levels. So in conclusion, let me conclude. The stocks that I find interesting right now. So it's Nvidia, it's SMCI, and it's CoreWeaves. The stock that is the cheapest is Micron. But Micron, I would be uncomfortable because it did an 8x in 12 months. So Micron would be on my watch list for a big pullback. And if we get the pullback on Micron back to, I don't know, 700, 800, then and only then will I start doing a full analysis on Micron. I think Micron has run very, very fast, at least faster than my liking. And you know, there's a few stocks I cover on the channel that are going through volatility. Volatility to the upside is a good thing, right? You look at Micron at 8x, it's so amazing, right? One of the stocks I cover, as you know, Strategy, my MSTR, MicroStrategy, is going through volatility right now in reverse, down 85%. And a stock that has 9x, you have to be comfortable with it potentially do a minus 80% drawdown at some point. Potentially. And so this is why I don't like to get into a stock when it has run too much. Anyways, so that's why I like CoreWeave. That's why I like SMCI, and Nvidia. Nvidia is a coiled spring. Nvidia has been only up 20%. It makes very little sense to me. To me, the coiling of the spring is loading, and at one point it will shoot. And sure enough, if you read a lot about Nvidia, which I do read a lot about Nvidia because it's a position of mine, a lot of technical analysts are saying that it will shoot up to like 270 or something. I don't do technicals, I don't do Fibonacci or that sort of stuff. This is not my thing, but you know, some people really believe in that stuff, and so I think Nvidia is due for a bounce. I think that's what I think. So, anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.